Yeah, today I want to show you how you can trade the turtle soup ICT's turtle soup strategy. You may have heard about the ICT turtle soup strategy, and you may have searched how to trade this strategy, and it appears very complex. Okay, but I'm here to simplify it for you. I love simple strategies. I love simplified strategies. Right? Trading forex don't have to be very complex. So that is why that's the purpose of this YouTube channel, to simplify all these strategies for you and make them very easy for you to trade and make profits from them. So today we are considering, as I said, we are considering how to trade the ICT turtle soup strategy. All right, so now what is the meaning of turtle soup? What's the meaning of turtle soup? In simple terms, turtle soup means stop hunt. It means stop hunt. Turtle soup means stop hunt. So actually is a movement. Turtle soup is a movement that is used to neutralize liquidity. All right, turtle soup is a movement to use to neutralize liquidity. If you are yet to view my video on utility liquidity, kindly check the link. I'll be putting the link on the description box of this video. So permit me to just say that turtle soup is the same thing as liquidity. It also is the same thing as stop hunt. Okay, turtle soup is the same as liquidity, is the same thing as also stop hunt. These three words can be used alternatively. They can be used in place of one another. They are synonyms when it comes to forex trading. All right. So, and also it can also mean false breakout. Okay. So turtle soup is the same thing as liquidity, it's the same thing as stop hunt, and the same thing as false breakout. But the application might vary. All right, the application from trader to trader might vary. All right, so I'm going to be showing you how to trade this turtle soup strategy. Turtle soup is it appears so complex, but I'm going to be demystifying it for you. So because it's the same thing as liquidity, it's the same thing as stop hunt, and it's also the same thing as false breakout. But the application on the charts might vary. All right, the application might vary. So what are the two types of turtle soup? The two types of turtle soup are turtle soup short and a turtle soup long. All right, turtle soup can be classified into two: turtle soup short and turtle soup long. So the turtle soup short is actually a short. It's actually a sell scenario. It's a sell scenario whereby there's a false breakout above a supply zone. Okay, I'm going to show you in the chart soon. All right, the turtle soup short is a sell scenario, while the turtle soup long is the buy scenario. So let us see it actually on the chart. All right, I'll be showing you some chart examples very soon in a moment. So the turtle soup short is actually basically a false breakout above a supply zone. It's a false breakout above a supply zone where stop hunt and stop liquidities, where liquidity exists, or rest, where liquidity exists. Let me show you how this works. You have a scenario whereby the market, we're in a bearish market phase, in a bearish market structure. We're in a bearish market structure, and this is a supply zone. Let's say this is a supply zone right here, and we are targeting. I want to show you the turtle soup short, because we say there are two types of turtle soup long and turtle soup short. All right, so what we are considering first of all the turtle soup short, and we say that the turtle soup short is a false breakout above a supply zone. It's a false breakout above a supply zone. That is turtle soup short, whereby the liquidity is being taken out. So in this case now, they were expecting for the price to come to this zone, give us some sort of entry confirmations and sell. This is the classical scenario. This is the classical scenario. All right, but for a turtle soup short, it is a situation whereby liquidity is being taken out. This market now respected this zone and sold. All right, but in a total soup short, let us see how that works. In a total soup short, the market comes to the zone and break above the zone. All right, you can see break above the zone, taking out. This is the peak of the zone. The market breaks above the zone, and you're going to think that the market is going to continue to buy. All right, but it was just a false breakout or a stop hunt or a total soup short. All right, it takes out what we call buy side liquidity. The market takes out BSL, buy side liquidity, on a total soup short. In a total soup short, the market takes out buy side liquidity on the supply, above the supply zone. All right, above the supply zone. So this liquidity here has been taken out, and now the market comes back, gives us some form of entry confirmation and sell. All right, so this is a total soup short scenario, or this is TSS, total soup short scenario. All right, now let us look at the total soup short, total soup long. All right, the total soup long. Total soup long is a situation whereby the market is actually a buy scenario for a total soup. It's basically a false breakout below a demand zone where sell liquidity are resting. All right, so in a normal scenario, in a conventional scenario, we have the market taking higher highs and higher lows. Now let's assume this is a demand zone. We're expecting, this is a classical scenario. It's a classical scenario whereby we want the market to actually come to this zone. In a classical scenario, the market comes to this zone, gives us some form of entry confirmations and buy. All right, so the market does not break below the zone. For a normal scenario, it doesn't break below the zone. But in a total soup long scenario, what happens is that the market is in a structure, is in a buy structure. Okay, is in a buy structure, and we're having our this is total soup long. We're having our demand zone right here, and the market comes to the zone. Instead of reacting here and buying, what does it do? The market breaks below the zone, taking out what we call, this is X, this is the low, taking out what we call the sell stop liquidity. All right, so in a total soup short long, we are having sell stop liquidity will be taken out. All right, so there are sell stop liquidity here. When we mean liquidity, we mean stop losses of retail traders being taken out by the institution. So it will appear as if it's a breakout and the market is going to continue to sell. No, it is only a false breakout or a liquidity raid, sell stop liquidity raid. And now what you see that the market comes back to the zone, gives us some form of entry confirmation and buy. This is a total soup long scenario. All right, so now let us see how we're going to trade it. How do you trade? You have seen the two types of total soup right now. You've seen the two types of total soup. You have seen that we have the total soup short and the total soup long, and I've shown you how these total soup occurrences happen. Now, how do you trade the total soup? Now, before we go into how you're going to trade the total soup, you're going to note that price usually sweeps. That sweeping happens like 5 to 20 pips above or below the zone. When you say above, we mean above the supply zone. When we say below the zone, we mean below the demand zone. All right, so when this happens, when price sweeps the liquidity 5 to 20 pips below the supply, below the demand zone or above the supply zone, all right, after they start sweeping of that level, you need to now trade against the movement that swept or that took out the liquidity. So when the stop losses in a supply above the supply, resting above the supply zone, are being raided or taken out, all right, within 5 to 20 pips, what are you going to do? You enter a sell trade. You enter a sell trade in against the movement that swept the liquidity, the sell stop liquidity, buy stop liquidity resting above the supply zone. And when in a demand zone, when the sell stop liquidity resting below the demand zone are being taken out within 5 to 20 pips, you enter a buy trade against the movement that swept the liquidity. All right, let me just depict what I've just said. For a turtle soup short, we have the market making higher highs and higher lows. I've explained this, but let us see how you now trade it. You have X. X here is your demand, your supply zone. All right, the zone we are targeting, and this S could be your previous day's high, could be your high of the day, could be your old high, could be equal highs. Okay, these are liquidities, and so the market comes to the zone, breaks the liquidity and comes down. You look for some entry confirmation, you sell. Now note this distance between these two, between the distance of the liquidity sweep is mostly about 5 to 20 pips. Okay, this is a 5 to 20 pips sweep. Okay, and so this is the turtle soup short. So this is 5 to 20 pips, and now your stop loss will be somewhere around here. The stop loss will be somewhere around here, which is around 10 pips. All right, this is your stop loss around here, around 10 pips. So the liquidity sweeps from experience is always within 5 to 20 pips, not more than 20 pips liquidity sweep. All right, and we have said that this high here, this high could be your previous day's high. This high, your previous day's high, could be the high of the day, the high of the current day. Okay, could be your old high, or could be your equal high or triple high or whatever. All right, so these are liquidities. So you look for some form of entry. You allow the market to take out all these liquidities resting above this supply zone, and now you do what? You get some form of entry confirmations and you get into a trade and sell down. So you need to be aware of this concept. Now let us look at this how to trade a turtle soup long. For a turtle soup long, the market creates higher highs and higher lows on a buy scenario, in a buy market structure, and now we identify a zone, a demand zone that we're going to enter, we're going to trade, and this is X, and I told you now our X represents our liquidity, and liquidity, our X is a liquidity, and liquidity could be your previous day's high, your high of the day. It could be an old high. Okay, no, in this scenario now is your previous. It could be your previous days, because we're in a buy market. It could be your previous day's low. It could be your old low. It could also be your high, low of the day. It could also be your equal lows. Okay, just these are lows. This is a low created in the previous day or in the current day. This is a low created in the previous day. This X here is the low created in the previous day or the current day. All right, the lowest low created in the current day, or it could be equal lows or equal high, equal lows or triple lows or whatever. All right, so the market comes down to first of all raise that liquidity. Take out this liquidity right here. All right, these are stop losses of traders, of retail traders. Stop losses of retail traders and traders that enter the market, enter demand and supply zones using buy stops and sell stops All right. So traders that enter demand and supply zones using limit entry orders that do not wait for entry confirmation. So the market first of all takes out their liquidity and now comes right up, gives us a entry confirmation and buy. So, and we have said that the distance of this liquidity sweep is usually 5. I'm going to show you right now in the chart in a while. Just stay with me, please. 5 to 20 pips, and your stop loss will be somewhere around here, which is around maybe 5 to 10 pips stop loss. So this is the scenario of the total soup long. All right. So now let us go right into the chart. Let's go right into the chart. I've just identified some examples for us so that we don't actually waste much time. Let's see some examples. Yeah, let's start from here. Like you can see in this case, you see all these lows, all these highs were rated by this. You may feel that this is going to be, the market is going to continue to buy. This is like a breakout. No, but it was not a breakout. The market rated this liquidity. These are our X. These are previous days highs or so, equal highs, and now you see the market drizzle down. We get entry confirmations in the lower time frame, and the market sold down. All right, market sold down. Right now, you can also see in this case, this is a low. This is a demand zone, and see how the market rated. The market rated the demand zone right down. We think it's going to be a false breakout. It's going to be a breakout, but you can see that the market actually came back up and bought. This is a scenario of the total soup short. This is a total soup long example. Let us see more examples here as well. You can see the market was rated. The total soup, the liquidity here was rated. All right, liquidity was rated, and you can see that the market this candle rated the liquidity, and before it now sold down. All right, so this is a total soup short example. Okay, let's also see more examples here. We are also seeing here the market rated this total soup short. No, not total soup short. This is a buy side sell side liquidity. Sell side liquidity was rated, and this is a scenario of the total soup long. All right, in this case the buy side liquidity was rated, and this is a scenario of the total soup short. All right, the scenario of the total soup short. Okay, so let us see more examples. You're going to be identified. You can see here right well. Here the buy side liquidity was rated, and there was a total soup short here. The market gave us a total soup short. This is a total soup short example. Another case here, the buy side liquidity was rated right here. The market rated it, and now we have a total soup short here as well. All right, so here as well, the sell side liquidity was rated, and the market gave us a total soup long. Okay, just take your time to practice this. Here as well, here the market gave us the market rated the buy side liquidity and gave us a total soup short right there. Let's see for more example. The same thing here as well. The market took out the buy side liquidity. It was rated, and now the market gave us a total soup short. Right? See another example right here. The market took out, the sell side liquidity was taken out, and the market gave us a total soup long. Okay, this is an advanced trading of supply and demand zone. The market took out the buy side liquidity and gave us a total soup short. Here you can see here multiple things happen right here. In this case, multiple there was a multiple scenario of a total soup short and total soup long. Here, see, the market took out the sell side liquidity and gave us total soup long. Here, the market took out the sell side liquidity and gave us the total soup long. You can see. Okay. Now, in this case as well, the market took out the buy side liquidity, and gave us the total soup short. Okay. Here as well, the market took out the sell side liquidity and gave us the total soup short. Here, the market took out the the buy side liquidity, and you see this candle took it out and gave us the total soup short. Here as well, the market took out the buy side liquidity and gave us the total soup short right there. And here as well, again, the market took out the buy side liquidity, and there was a total soup short. Here also, the market took out the sell side liquidity and gave us a total soup long. Okay, so I would like you to take out time to check your chart and try to backtest this. Try and backtest this strategy. This is so you have been exposed to this advanced form of supply and demand zone trading. More of such contents will be coming your way soon. All you need to do, just kindly subscribe to this channel. All right, subscribe if you're yet to subscribe. I love demystifying forex trading concept. I demystify forex trading. It doesn't have to be so difficult as some traders make it to be. It does not have to be so difficult. All right, these are simple concepts that I help to demystify. And you want me to train you. Now, some things I might not be able to share on this YouTube channel. I also expose some of these things also in an advanced form to my mentees. Join my free Telegram channel. The link to that channel is in the description box of this video. And in that channel, what do? I post free chart analysis almost every day. Like you can see the chart, I posted a chart on gold and also on Euro GBP, and you can see how they played out so beautifully. People made money from those trades. These are free chart analysis and signals which people charge a lot of money for, but I do that for free. Join my free Telegram chart analysis group. The link to that group is in the description box of this video. All right, and also I also carry out one-on-one mentorship. How can I take you by the hand and help you to become a forex trader? Take it from the scratch, A to Z of smart money concept. We'll be teaching you how to create a forex robot, how to get how to pass profit and all that. All these things are in my mentorship program. I'm going to take you by the hand one-on-one and train you on to become a profitable and successful forex trader. And my link, if you want to contact me, my contact details is in the Telegram channel of this Telegram channel, all right, which you're going to enter. You're going to see the link in the description box of this video. Kindly contact me. We're going to start this training, and your forex trading struggles should end, because I'm going to take you from losses from a struggling trader to a successful trader. So kindly contact me. So, and do not give up on trading, because very soon you're going to see the results if you do not give up. So till I come your way next time, do have a wonderful and a blissful day. Bye.